Hello and welcome to ET Now. You're watching IPO Central and my guest today is from ICICI Prudential AMC, Nimesh Shah. He is the MD and CEO of the company. The company's IPO is opening on 12th and closes on 16th, price between 2061 to 2165 rupees. It's a 10,600 crore OFS where the promoter Prudential is selling through the OFS route, and that values the company at a little over 1,07,000 crores. Nimesh, thank you very much for joining us on ET Now. To begin with, it's an OFS where one of the promoters is selling of nearly 10% stake there. Eventually, you have to reach 75% over a period of few years. Will there be more selling from Prudential, or will both the promoters be selling off?
Today is a 51-49 joint venture. ICICI Prudential is a 51-49 joint venture. 51% is with ICICI and 49% is with Prudential. ICICI is very clearly stated, it has written to the exchanges also, that this company will continue to remain its subsidiary and it has got no plans to sell its equity. So for it to remain a subsidiary, ICICI has to be more than 50%. So it has already said that. So ICICI is not neither selling it now nor is going to sell in the coming future. That is, no indication has come from ICICI on that. So if this company had to go public, Prudential had to sell. So Prudential came in 1998 into this company as a financial investor, and today after 28 years, right after 27 years, they have decided to sell. So they are selling part of their stake, 10% they are selling now. So over a period of time, they are supposed to sell 25. Those SEBI guidelines, whatever are the SEBI guidelines, they will adhere to that, and within that time period, they will have to sell that.
Nimesh, you're one of the largest mutual funds in the country, having a market share of nearly 13.3%. In the equity, it's close to 14%, which is there. I want to get your views on the valuation of the company. You're coming at 2061 to 2165. How do you value the mutual fund? Because I'm asking this question because every IPO that comes in the market, they come to you for valuation. So let me ask you, how do you value your own company?
So I would say that valuation, more than valuation, let me talk about the company.
Yeah.
Or the essentially an AMC is what is the operating profit of the AMC. Right? AMCs across the world are measured on the operating profit that they can make. Net worth in our business does not make any difference because you don't need much net worth to run a business. You can, without incremental capital, you can keep on growing your business.
True.
That's the nature of the business. You invest your brand into this business, you invest your intellectual power into the business. So that's what you invest in the business. So there is no capital required for further growth. Even the 3,000 crore, we have got only a 3,000 crore capital base today, 3,500 crore capital base, and that also what is the core one which is required to be invested in the schemes of the company would be around 1,500 crores. So that's the broad this one. So in this, operating profit is very important. The company has always focused. We are a company which focuses on three things. Whenever we do an activity, it is a mix of three: whether this is the right product for the customer, whether does it put the brand into abnormal risk, and third is that it should be profitable. All three criteria have to be tick marked, and then we do that particular activity. So it's there is one parameter as far as the shareholder are concerned. They should measure us on our profitability, whether we are profitable enough. We enjoy good profits in the company. Our operating margin, the profit that we have got a 20% market share. While you discuss about the bottom line, top line market share may be 13.3% overall, 13.6% in the equity space, equity and hybrid space. But on the profit side, operating profit side, my market share is around 20%. Right? So it's a profit focused company, and valuation is in the eyes of the beholder. So valuation right now, while on every valuation I might comment in the industry, my own valuation I'll leave it to the investors. I met a lot of investors across the world, and I met a lot of my peers. Right, the biggest, the most important investor today, right, the way it is stacked, are the mutual funds, are the insurance companies, are the pension funds in this country.
True.
Right, so we have had a lot of discussion with a lot of them, right, and we have come to this valuation after thankfully thinking through the numbers. But we have got enough feedback from some of our investors.
As a buy side entity, you have ensured that every issue that comes in has something there on the table for the investors, whether it's unit holders of mutual fund or whether it's the shareholder, retail shareholders which is there. Do you think you are leaving enough on the table for the?
Yeah, we believe that. That was the question that even my board would have gone into, right? And we feel that we have left enough for the buying shareholder.
And that would be how much?
That I won't be able to. If I say that, then I know more than the market does, and I don't have any such illusions.
But you are the market maker for many of them, right?
Yeah, but I cannot be investor in my own stock, so I will not comment on that particular part.
Okay.
It would be very unfair for me to talk about that.
Okay. Let me,
You should talk to some of the people, some other mutual funds in the country to talk about it.
No, because your FY25 P is 440 or 40%, which is slightly discount to HDFC AMC's
Come again?
40.4 and HDFC AMC has 45.2.
What is it?
The price to earnings.
Okay.
Which is
you are looking at the total profit. I always said that in this, see, if you are
at the end of the day, market will be looking at your PE from that point of view.
If you see in a mutual fund, in a AMC, you always look at operating profit, because if forget any AMC, if there is a net worth, there will be return on that income, which is other income. Yeah. There is no point in multiplying other income by 40 or 45, whatever you are considering. There is no point in doing that. So whatever number you come to, look at the operating profit and not the total. Total profit is a function of how much net worth you have. If somebody has a higher net worth than me, then his other income will be higher and the PE ratio will look lower. Right? So please look at the operating profit and not the total profit.
Okay, so your operating margin is around 0.37%. That's what it is, and it's been maintained at that. Is there enough room for you to increase that from going forward?
We don't look at business that way. When we look at business, this whatever you are saying, the margin is a mix of many areas. There will be a liquid fund where margins are very different. There will be equity funds where the margins are different. There will be alternates where the margins are different. There will be real estate, there will be credit, there is ETF, right, where the margins are very low, right? So this mixture of these 5 different businesses
blended margins
comes to this one. Now, during the coming year, I don't know which business will grow how much, right? So it would be very unfair if I tell you that it is going to, do I know if the equity markets go up, my equity AUM goes up, then the margins on that would be higher than the other, so the margins can be better also. So it depends on which part of the business grows, and that depends on the market conditions. So I always say, you tell me what will the market levels in future, I'll tell you what my profits will be. So everything, with 6.5 lakh crores of equity that the AMC would have across mutual fund, across alternates, what happens in the market also affects my profit. Because mark to market, it can go up, it can go down. So we are a factor of the market. Our profitability will also be a factor of the market.
When you said that it's a market determined thing, let's talk about what happened in the last 1 year. Markets have been almost constant at where it is. There hasn't been much of returns for the investors. How has the investor behavior changed in the last 1 year?
In fact, investors in this country are maturing very rapidly. If you, we just had a discussion that if you see the numbers of 25-26, they are only marginally lesser than 24-25. So people are investing even in 25-26, at least even in April, May, June, we had 6 to 9 months of zero return, right, or negative return. But people have been investing. Right. So September 24 was the high of the market, which was again achieved now. Right. After 1 year. So 1 year, I agree with you that there were no return in the markets. So we have always focused on dynamic asset allocation. If you check in the market, we are 1/3 of my equity and hybrid assets are dynamic asset allocation. So funds like Balance Advantage Fund. In September 24, they were only invested 30% into equity. So even in a year like this, where markets have not given return, in this dynamic asset allocation, the customer has got a reasonable experience, because it is a mix of equity, debt, and sometimes in multi-asset fund, it is a mix of metal also. So we have always encouraged retail investors to invest in this hybrid funds, where asset allocation is very dynamic. So in COVID times, say in a Balance Advantage, the allocation to equity was even at 78%. The same fund in September 24 had an allocation to equity of 30%. And today the equity allocations would be around anywhere between 48 and 52%. Right? So with levels in the market, we keep on changing the equity index because we know that our customer can be pro-cyclical, but our products have to be contra-cyclical so that he gets a good experience. He'll give me money in September 24, I'll take it in balance advantage fund and allocate only 30% to equity. So after 1 year, he has not had that bad an experience over there.
So,
So it depends on, it is not one experience of the customer, it depends on what customer has got in different funds of mine. And only those funds where I can tell you this the SEBI has created such a nice product that it is so good for the investor that he will see the past returns and only funds which have created returns can get money. If my fund has not done well for the customer, however good my marketing network would be, I cannot get money for that.
You have nearly 15.5 million customers which are unique, right, in that sense. Of that, how much are active and how much have have not been active, or in the sense they have not been investing in the last 1 year?
Active in the sense,
have the invested,
not the active and passive, you are not talking about that.
I'm talking about who have invested on a regular basis.
That I won't have the exact data that how
but
many.
Is it a large portion?
I won't have that data. Right now I don't have that data. I can always
but
dig
do
the
you
data.
think that investors are using market cycles to put more money into mutual funds?
There are different type of investors. There is one thing that I can tell you is that the SIP amounts are only growing.
Yeah.
Right. So I don't think today's customer is getting deterred that 1 year the market has not given me returns. Right. He's very clear. I think the communication, and thanks to media also, thanks to I think the AMCs also have done a good across the industry have done a good job of investor education, where every guy who's coming in is coming for the long term. Otherwise, the SIP numbers have been growing in the year 25-26 also.
Yeah.
Right. Beginning of the year it was a different figure. Today it is a different figure.
Yes.
So the numbers are growing. So I think a high percentage of the customers understand that equity will be volatile, and if the market, a reasonable percentage customers understand that if the market falls, they should invest more. Otherwise, they would not have invested all through the year.
Do you think that in the last 9 or 10 months, because of the kind of the triple impact of cuts which have come in, first income tax cuts, then followed by interest rate, then now the GST, which has led to more money in the hands of the individuals, a large part of that, instead of going into consumption, may have gone into investment into mutual funds?
See, India is such a big market and it's such an infinite market. You can subscribe many reasons for what has happened.
What are you seeing?
There is, the way I look at this business is there is a infinite, I'm getting into an ocean, right? There are traditional instruments. The way I look at it, I'll tell you how I look at this business. There is a set of pool of money, a huge pool of money is lying in traditional instruments, right? Which are not beating inflation. Today's young customer understands that if he has to beat inflation, he has to participate in the markets. So either he is reaching the market directly or he is coming through mutual funds. So that is a very smart way of doing it. So that is why the growth is increasing in individual customers also who are directly going to the market, and our customers also. Right? Our customers in the last 7 years have gone from, I'm saying as an industry, have gone from 1 crore to almost 5.5 crores today.
Yeah.
Right? Why it is happening? Because the customer is moving from traditional products into capital market related products. So that is a good thing to happen. And the growth is happening from there. Now this set of customers, earlier I used to say as my customers get wealthy, I will get more money, right? If my performance is good. Earlier 1 crore customers, I was waiting for them to get wealthy so that I get more money. Today there are 5.5 crore customers, right? Who will over a period of time, and a lot of them are young people. Over the next 10, 15, 20, 25 years, they will have much more wealth than what they have got today. And they are exposed to capital market much earlier than my generation.
As an industry leader, are you happy with the kind of expansion of customer base which has happened? Means you are at 5.5 crores. If you look at unique customers in this market, it's around 13 odd crores which is there. The mutual fund being the much more safer platform or vehicle for investing into market has not been able to catch up with the equity markets, despite the fact that there is a professional person managing funds for them.
So it's whether the glass is half empty or half full, whichever way you want to see. I I am in the business of mutual funds, I only focus on one thing: where is our investment performance? I believe the customer will come in. We have to ensure that people who are in have got a good experience. I believe once a customer gets a double-digit return, he will invest further money with us. So let us focus on investments. If we focus on investment and risk management well, and investment at this scale is all about risk management. So we are focused on risk management. We are within the company, we have got so many different styles of managing money. We have got a value style of managing money. We have got a growth style of managing money. We have got a quality style of managing money. We have got some person who's using quants a lot. So we have got different types of fund managers managing different products. So we believe that if we manage investments well and we gradually improve our processes every day, we learn a lot every day and improve our processes, will give a better investment experience to the customer. And once he gets a better investment experience, he'll come and invest more. So one should not worry so much. And this has been investment centric AMC business is much more sustainable than a company which is sales centric.
On that point, the mutual fund industry is more B2B in nature in that sense, and because distribution is the biggest backbone for you guys. But the customer profile is changing. A lot of customers are coming in now directly to the mutual fund. Is there a need to be now B2C, B2 customer centric basically?
So customer has got many options today. SEBI has created all options for the customer, that if he wants to come digitally to me, he can come digitally. If he wants to come to walk into my branches and do business with us, he can do that. If he wants to work through an IFA, he can do that. He can work through a bank. We as ICICI Prudential are present in every space. I've got very strong banking tie-ups. I've got very strong relationships spread over last 3 decades with my distributors, individual distributors in various parts of the country. I've got a very good branch network, and I've got a very strong online presence. The customer chooses. I am not the person to decide how the customer interacts with ICICI Prudential. Different customers interact in different ways with ICICI Prudential, and we should be present in all the platforms that are possible.
And that needs for a change in the way of how you look at customer as well, because currently most mutual funds look at distributors as a key partner, and customer centricity comes the second, because customers, and now that 50% of your customers or the customers are directly coming to you, does it need to change, use technology to be much more centric to customers?
There is a basic disagreement that customer centricity is so important in this business. Without customer centricity, we have definitely very good relationship with the distributors. We build on these relationships, but for the distributor also and for the industry also, customer centricity is the most important thing. And SEBI has actually aligned the interest very well. Today, a customer makes money if he remains long term. A distributor gets only a trail. So there is no incentive for him to churn. Distributor also earns if the customer remains long term, and we also earn if the customer remains long term. So there is a complete alignment of interest. It is very different from the time where there were upfront commissions, right? In upfront commissions time, the distributor had so we have to be focused everywhere. Without customer centricity, no distributor can sell your products. Distributor will not be able to sell. If my funds don't perform and are not good for the customers, the distributor won't be able to sell any of my products. Show me any AMC which has been able to sell any product which has not worked well past for the customer. You can't do it.
How do you look at risk management? Because at more than 10 lakh crores average AUM, risk management comes into play for any AMC. How do you look at that?
I always believe, and I have stated this many times, that I believe that we run ICICI Prudential Risk Management Company. Right? Our risk management has to be up there, so that this country is a beautiful country to do business in, where the nominal growth itself, depending what our view are, will be 10 to 11%. In a country where nominal growth is 10 to 11%, the top corporates of this country will do better than the nominal growth. So if an AMC is doing risk management well, right, the probability of him beating the benchmark are quite good. right? So that is where we are focused on. We are focused on our processes since last number of years, and if we have done well as an AMC, when we were small, 15,000 crore AMC equity, also we were operating in a certain way. As we have kept growing, we have kept on learning and change our processes accordingly, and I think that is why we have done well.
There are a couple of regulatory changes which are coming in. The regulator has been, fast in adapting to new changes and new environment. One is the total expense ratio, which has been now talked about how it can be done. Recently, the regulator came in for some more incentive beyond 30 for women investors coming into the. How are you managing those kind of challenges?
They are not challenges at all. They are making the customer better, the product better and better for the customer. If you see the last 18 years, the regulator has consistently improved the product for the investor, right? And as the product today, the industry is doing well because the regulator has ensured that the product is good for the final investor. So these changes will keep on happening, and we have to adapt to those changes. And it is a very consultative process of making changes, where the regulator has a discussion with us, understands the full impact, and then makes the changes if required.
I was looking at your RHP, and you have a dividend payout ratio of nearly 82% for last couple of years, and you've been consistent in that. Will that continue after listing as well?
In the RHP, we have mentioned that we will endeavor that we will have a more than 60%. 60% should be the minimum dividend payout ratio endeavor. That if everything is okay, etc., then we will. So that
why should it reduce from 82%, which has been there for last 4 or 5 years?
The board will decide according to the cash flows of the company. I told you earlier also, the company does not need net worth.
Exactly.
We have got more than sufficient net worth. So the board will decide what is the best for the investors in the company, the shareholders, and they will give the dividends according. There is no need. I have said the minimum. I have not said that I will reduce. Nowhere I have said. I have said so that the people
you're
get it.
Putting a lower threshold basically.
I don't think the board has any plans. I am not aware of any plans that the board has to reduce it in any way.
My final question is with respect to a recent controversy that happened with respect to anchor books, where mutual funds were complaining that allocations have not been overboard, or unusual high allocations have been made to a particular AMC, and the data also shows that up 25% of the anchor book was given to one AMC. What is your view on that?
That is the company to decide. I am nobody to have a view on all that. So there will be things that happen in the market, and as long as they are as per SEBI regulations, there is perfectly no complaints.
Do you think there is a need to relook at it?
No. Let the market is very good. Let the market forces decide what is happening. I have got no complaints or anything about anything.
Thank you, Nimesh Shah. Thank you very much for joining us today. Nimesh Shah of ICICI Prudential AMC, and the IPO is opening on December 12th. Thank you very much for joining us today.